6 points down on the Nifty, 2 down on the sensex. It's another quiet opening as we begin trading hour. Hello and welcome to the show. I'm Reema Tendulkar, with me Asubhi Upadhyay and Pavitra Parikh. Girls, there is so much news flow, right, in terms of global earnings, in terms of domestic earnings reactions from heavyweights like a Bajaj Auto or a Tata Consumer, but the markets refuse to move. The only action that we've seen so far in the morning is that the early morning levels, which were flat, were sold into, but markets from there have seen some buying and have recovered and currently are pretty much unchanged. Similar picture on the banking stocks as well, but the banks are facing a bit of resistance. So yesterday, the Nifty twice turned from levels of 42,800. And today as well, the early morning, you saw the markets decline, but from there, it's managed to see a bit of a recovery. A quick check on the Asian markets, and you would see the picture is fairly mixed. Hong Kong market is up close to about 0.7%. The Taiwanese markets are up, but a couple of the others, like the Japanese markets, are trading in the red. The Dow futures currently is higher by close to about 45 odd points, perhaps a rub-off impact of the strong earnings that we've seen from a couple of these tech majors like Alphabet as well as Microsoft. In terms of the early movers in trade on the gaining side, Eicher Motors, Tata Motors is also higher in trade. There was an S&P upgrade of their rating, so that's pushing the stock higher. Maruti Suzuki is seeing some buying ahead of numbers. Generally, IT has come in for buying. Perhaps it's a rub-off impact of the global tech majors' earnings. So the Nifty IT index is up 0.4%, and in that, names like TCS are seeing some buying. L&T is holding up quite smartly in the green. On the losing side, metals on the back foot. The top two losers today are the commodity names, Hindalco as well as JSW Steel. Reliance Industries a bit subdued, and Bajaj Finance, ahead of numbers, has come in for some amount of selling pressure. So that's down close to about 0.5%. But really, no big moves on either side, girls.
No big moves on either side. I think, Reema, and the market just looking at, some trigger. That trigger has to come in the form of an outlier number, an outlier earning this quarter, I think. And we've not yet had that. We had an outlier, but it was on the way down in terms of IT. ICICI Bank, yes, which is why Monday started off, on a very different note. And now we're kind of muddling along all over again. So the short point is that there is a congestion zone that we are in. 17,750 to about 800. This remains a congestion zone. The market has turned, rather 17,800 to 850. Let me, rephrase the range. 800 to 850 is a zone from where the market has turned not once, not twice, but several times in the past. And we need momentum. We need impetus to get above this resistance. And that has to come from numbers, because internationally, remember, there are, concerns again. Yesterday, First Republic Bank really led to a lot of confusion all over again about the health of the US banking sector. Back home, it's about earnings. So today, can we get that? Well, just looking at the big numbers today, there's Bajaj Finance, there are the life insurers. But unlikely, unless Bajaj Finance comes out with something absolutely out of the box. We already have their update. We already know the growth numbers. We are already, it's very expected in the margin profile, etc. So not expecting a big pop over there. Maruti, I think that's the other one on which the market will have its eye to gauge what the consumer is thinking and doing. We had evidence of that in the form of Nestle numbers. Remember, the volumes are very good. We saw that in Tata Consumers numbers, fantastic numbers. Bajaj Auto domestic growth looking very, very robust, and now Maruti. So perhaps if it becomes clear that the domestic consumer is vibrant and kicking, maybe the market will try and latch on to that. So for me, I think Maruti's numbers are probably going to be the one big event that I would look out for. Pavitra.
Oh, absolutely. And this is also one of the stocks which hasn't really done much going into earnings, right? Unlike Bajaj, which has already moved up 20% this year. So Maruti's been very flat. So that'll be interesting to see how that one shapes up. In terms of other, action from the broader markets, it is once again the small cap index which is holding up. So for the week, it's up 1.5%. Once again, better than what we're seeing on, of course, the frontline indices. All of the Gujarat-based PSUs are really moving up and seeing big gains over there. We'll talk more about the reason there's been a change in policy which has been announced by the government. So we'll talk more about that. The real estate stocks once again doing well. That index is up around 2.5% this week, around 12% for the month. So you have the likes of Indiabulls Real Estate, which are up 2%. Reema was mentioning the auto stocks which are doing well. A lot of the ancillary companies also. So something like a Mahindra CIE after good results has moved up well. So that is up 4%. It's come off a bit, but still quite a bit higher over there. And you also have all of the hotel stocks which are surging today. So take a look at Lemon Tree. You have Kamath Hotels, both of those doing well. Something like an EIH also moving up. Lemon Tree is up 8%. So that's definitely one space where you are seeing some amount of green. But let's kickstart the show now by talking about the big story that we're tracking on Trading Hour this morning. Gujarat PSU stock surge in trade. This after the state has announced a new policy for minimum dividend distribution and bonus issues as well. Sonal joins us with all of the details. Sonal, take us through what this new policy really looks like.
Thank you so much for that. Well, yes, all these stocks are in focus. Gujarat government has gone ahead and announced a new policy for minimum levels of dividend distribution that can be done for the shareholders and bonus shares for PSUs as well. Let me run you through each of those segments. For dividend payout, for instance, the minimum level of dividend will be 30% of PAT or 5% of net worth, whichever is higher. That has to be given out by the company, and only minimum and maximum dividend payouts can be done. That is the range basically in which a company can give out dividends to the shareholders. In terms of buyback, PSUs which have a net worth of at least 2,000 crore rupees and cash and bank balance of 1,000 crore rupees can go ahead and should actually, it's a thing that they have mandated for these PSUs to go ahead and do the buyback as well. In terms of bonus shares, the defined reserve and surplus should be more than 10 times of the paid-up equity share capital, which is the case for most of these PSUs. In terms of share split, the market price or book value should exceed 50 times of its value as well. But again, all these parameters do not go along with all the listed companies as well. It's only GNFC which can do all these things to enhance shareholder return as well. So running you through some of these numbers, the list is for you on the screen, all the Gujarat listed entities. Let me run you through individual numbers as well. For Gujarat Gas for instance, they have made profits of around 1,300 crore rupees in FY22 with net worth of 5,600 crore rupees, which makes 5% of net worth at 280 crore rupees, 30% of PAT at 386 crore rupees, but they do not have enough cash in their books to pay out such kind of a dividend. And so far, their dividend payout has been around 11%. For GNFC, as I said, they will be able to do all the above criteria that I just mentioned, because according to the formula, 5% of net worth is around 400 crore rupees, 30% of profits is around 511 crore rupees, and they do have substantial cash in the books around 1,200 crore rupees. And even in terms of bonus and buyback, they do meet the criteria which is prescribed by the government. For GSFC, they have a cash of around 300 crore rupees. Net worth is on the higher side. So according to the formula, they can either pay out 600 crore rupees or 267 crore rupees, whichever is higher. So yes, that is a positive for the shareholders, but their cash in the books is capped there. Gujarat Alkalis as well, they have a cash of around 300 crore rupees and they can pay out maximum of around 300 crore rupees or 170 crore rupees to the shareholders with a profit of around 600 crore rupees. GMDC2 has enough cash in the books around 1,200 crore rupees. Again, it is as on FY22. They can pay 5% of net worth, which is around 236 crore rupees, or 30% of PAT, which is around 31.5 crore rupees. So yes, GNFC is the one. That is where the shareholders tend to benefit the maximum, followed by the likes of GSPL and GMDC in some cases. So it's not equal for all the listed entities as far as the Gujarat government's holdings are concerned.
Sonal, thank you very much for that detailed analysis. But across the board, stocks are flying today. So GIPCL is up 15%, GSFC 12%, GMDC 10%, GSPL is up 8%, GNFC is up 6.5%. Gujarat Gas is the only one which is trading pretty flat. To take the conversation forward, we're now joined by Deepak Shenoy, founder of Capital Mind, to take some questions. Deepak, you heard the analysis that Sonal put up. You've done the numbers yourself. Let's tackle this one by one. In the case of a buyback, is it just GNFC which can announce a buyback, or are there any other companies eligible for a buyback in Gujarat?
So it turns out, Rima, I think you can do, based on the September numbers of Gujarat State Petronet, they might have 1,000 crore plus cash at the end of the year. So if they do, they might have to qualify for the buyback and therefore do the buyback as well. I think they also qualify for a higher dividend. They've been paying less dividends compared to the 30% required. So the two clauses for them and in terms of the buyback, GNFC and Gujarat State Petronet might have to do a buyback. Depends again on the numbers we see in the March quarter.
Okay, just to reiterate that, GNFC and GSPL, Gujarat State Petronet, so they meet the criteria and they will probably have to up the returns to the shareholders by way of either higher dividends or a buyback. That's the point, Deepak?
Both actually, because it doesn't say either. The thing says pay 30% plus do a buyback.
Just one more question. You said GSPL has been paying a lower dividend and now they will need to increase that based on the formula. Can you give us the numbers here for GSPL and even for GNFC?
I think their GNFC has been paying, well, I think they paid 10 rupees per share last year. They can, I mean, in the formula, they should be paying something like 30 rupees per share.
Okay, Deepak, your line was frozen. So could you repeat the numbers for GNFC? You told us the company paid 10 rupees of dividend. Based on the formula, they can pay up to 30. What about for GSPL? What are the dividend numbers looking like?
GSPL was 2 rupees, I think, and the potential dividend can be upwards of 12 rupees, depending on the profits trailing 12 months. But again, this is tentative. I don't know the March quarter results. Things may change, but by and large, these two companies and most of the others also may have to up their dividends a little bit. Remember, of course, that dividends, even though the formula may say that they have to pay 30%, they don't have enough cash in the bank. They can actually borrow money, increase their debt and pay dividend. And many of these companies have very low debt, so they can actually increase their debt levels if they have to meet the criteria. So it depends on what that, whether they're allowed to take debt more or not.
Okay, got that. Thanks for joining us. The other announcement that has come through is also on the splitting of shares, right? Where the market price or the book value of the PSUs exceeds 50 times its value. What is the study here? This should also work for GMDC, right?
Yeah, I'm actually not keen on analyzing that because bonuses and splits don't add any value to shareholders. They just move equity from, something from a shareholder's equity is just consists of just capital, share capital plus reserves. If you move something from reserves to share capital, it doesn't do anything, just changes items on the liability side of the balance sheet. So for a shareholder, it does not add any value at all. People think of bonus shares as a positive, but I don't know why. It's just the same, exact same as a split. It doesn't do any difference in valuation to the company. So yeah, they could give bonuses till kingdom come, but I don't think it's going to make a difference to our stock, our analysis of the stock.
Okay, yeah, got that. It just makes you feel better that you have more shares and hopefully they all go up and then you get wealthier, right, Deepak? Okay, so, summing all of this up now for shareholders, there's obviously pure fundamentals attached to these companies and, that continues to be a driving force. But purely going by expectations of higher dividends, basically better cash payout by these companies, which stocks would you look at buying? I mean, a lot of people buy stocks only for great dividend yields, right? So which ones would make the cut for you?
Actually, I don't think they're great. So by the way, all public sector enterprises have to pay 30% of their profits as dividends. This is central government owned PSUs. So now the Gujarat state government has done it. So the dividend policy has kind of been synced with the central government. So I wouldn't buy these stocks for dividends other than maybe like a Coal India type company, which has such a monopoly that it continues to generate dividends. So it's like if it was giving me a better yield than fixed deposits, because fixed deposits are taxable, dividends are taxable, then yes, you'd buy them for dividends. But otherwise, I don't think very attractive. Maybe for buybacks, you might see an attractive opportunity because when you reduce the amount of total shares available, the earnings per share of these companies grows. So if you have a reasonable growth rate of even 10%, you will end up with a higher earnings per share growth simply because of the buyback. So that might make some attractive. Again, the only companies that meet any of our criteria are GNFC and GSPL. But we don't own any of them right now.
Deepak, but other names like GIPL, that's Gujarat Industries Power Company Limited, you've got a GSFC, which is moving up, you've got a GMDC moving up, and all these stocks are up in double digit. Do you think the up move is unwarranted in these cases? It's not going to move the needle in terms of shareholder returns?
Yeah, I mean, the stock markets react to, information either sometimes half-heartedly or assuming too much and all that. So, you'll find that the move will fizzle out once they realize that these companies are not capable or cannot pay or will not be able to pay because they don't qualify. So yeah, some of these companies, the move is unwarranted, but we have to also consider that some of these companies may have been beaten down in the past. So maybe this is just a trigger for some people to reconsider them. So that's why it's gone up. But either ways, I don't think one should just buy on this news. Should wait for confirmation from the companies and the March quarter results, because strange things can happen. So and many of them are just borderline.
And just one more question. Is this a first step towards divestment? Would you read it like that?
It's interesting, though I think it'll help towards more corporatization. I think one of the things that these companies, a lot of steps have been taken. They have to corporatize their structure. Many of them have deposits, for instance, with a state-owned finance company that has 100% NPAs. So, all of that structure will not sit very well with a private investor. So you'd have to kind of clean up a lot of things before they do that. I hope it's a first step towards increasing private participation in some of them. But I mean, actual disinvestment, given the last 10 years, I would just say, let it happen, show me the money, and only then I'm going to believe that it's happening. So good steps, but yeah, I mean, much more will is required.
Got that. Well, at least they're showing you the money in the form of higher dividends. It's a starting step, perhaps. Deepak, always great to have you. And thank you very much. You made some very, very important points, so worth keeping in mind. Thanks for joining. And we'll take a quick break on that note. On the other side, shift the focus to commodities. We'll ask Manisha Gupta what the headlines are in that universe.
Blue, red, yellow. I'm a chameleon. It's my job to change color. But your wealth manager, well, they shouldn't be copying me, you know that, right? Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
तेरी रोशनी हूं मैं किसना
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1026 rupees to 1080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
We are all different, but our soul is the same. We go wherever life takes us. And we do it in our own way. Because it's our differences that make us who we are.
अरे अभी तक मटेरियल आया नहीं? पैसे नहीं है। मटेरियल कैसे आएगा? अच्छा।
पैसे का अब भी टेंशन मत लो। यू ग्रो कैपिटल का ग्रो एक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
Welcome back. You're still tuned into Trading Hour. For the market, it is absolutely quiet, but we have moved around 7 points into the green, so very flat once again. The Nifty bank is the one where you're seeing some red still play out, so that is around 25 points lower, but the mid-cap index is also just about moved into the green right now. So as flat as it can really get, but there is a lot of action happening in the world of commodities and specifically with crude. So Manisha is here to fill us in with all of the action. Hi, Manisha.
Thank you for that, Pavitra. We have seen 2% of a decline come in for the crude oil prices overnight. So after 5% decline in the previous week, this week as well has seen 3% of a decline come in for the crude oil prices. A bit of a positivity on your screens right now that has been buying on the dips right now, and some triggers on the lower side as well. And that is clearly only because it's going to be China's Golden Week holiday. And we do understand that there are a lot of bookings being made for on-air travel and on-road travel planning as well. And that clearly seems to be supporting. But apart from that, the overall demand is still on the weaker side. We are looking at the crude oil prices trading to a 2-week lows. U.S. gasoline prices are trading at a 4-week lows as well. The tightening financial conditions, and the markets are anticipating a 25 basis point rate hike from US Fed in the first week of May, and there could be yet another rate hike. In the next week, you also have Bank of England and ECB meetings as well. So there could be a couple of rate hikes actually coming in into the next week. The market's also looking at the shrinking margin profits in many of Asian countries. That's weighing onto the prices also. And the US weekly inventories have shown a decline of nearly 6 million barrels of crude oil. So that tells you that even as the refining margins are higher, you haven't seen that build-up or that demand come into the markets as well, and that's weighing on. For the very near term, the chartists tell us that it's going to be between 78 to 85 on the higher side as a range for the crude oil prices for the next couple of months to come.
Okay, got that. That's the picture on crude oil. Thank you, Manisha, very much for that. Back to equities, looking at one more stock that's in focus today, and this is MCX, which has been down about 4.5%. This after the company's chief technology officer, Shashank Sathe, resigned. Surabhi Sutaria is here with some more details. Surabhi, is it just that resignation, or is it something else as well that's bothering MCX today?
Thanks so much for that. So MCX is reacting today, and that is because their Chief Technology Officer, Mr. Shashank Sathe, has resigned. And in the interim, Dr. N. Rajendran, the Chief Digital Officer currently, will be taking over. But the main concern for MCX is regarding their implementation of the new tech platform by TCS. Now, MCX was supposed to switch to TCS as a software service provider last year, but that did not happen, and they have extended their current contract with 63 Moon Technologies till June of 2023. Which is why their software support expenses in Q3 also was up by 3 times, nearly 68 crores versus 22 crores on a year-on-year basis. And this pain of escalated software costs was going to last another 2 quarters. In Q3 con call, management did seem confident of launching their new platform in Q1 and switch successfully to TCS as a software provider, and they were going to plan more mock sessions in Q4 and Q1. So till the switch doesn't happen, that overhang is going to remain on the stock.
And then will the resignation of the CTO further delay the integration once the TCS software comes on board? That remains to be seen, but the stock is down close to about 5.5% in trade. Thank you, Surabhi, for highlighting that. Get into a break. On the other side, we'll discuss market technicals. Mitesh Thakkar joins us next.
पिछले 6 सालों से हर रोज यही हो रहा है। ये वो SIP है जो चौधरी साहब अपनी बेटी के लिए कर रहे हैं। जब जिंदगी जीने का तरीका ही SIP है, तो जिंदगी के लिए SIP क्यों ना हो?
An investor education initiative by HDFC Mutual Fund. म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
I am heat. Blazing heat.
I'll be right back.
Wait, what's the hurry? Blue Star Inverter AC with fast cool technology. Bye-bye heat. Blue Star.
Zedlac Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
चलो देश का रूप निखारे, पर्यावरण को हम ही संवारे, प्रदूषण से बचाने को अपनाएंगे।
Register for MSME Z certification today.
घर रेंट पे देना है और ये अब तक ब्रोकर के पीछे पड़ा हुआ है, और मैंने नो ब्रोकर पे बिना ब्रोकरेज के एक अच्छा टेनेंट ढूंढ भी लिया।
फ्री में घर लिस्ट करो और आपका नो ब्रोकर रिलेशनशिप मैनेजर सब देख लेगा। तो ब्रोकरेज क्यों देना? नो ब्रोकर है ना।
कैसे करते हैं ट्रेड?
ट्राई 5 पैसा। ऑर्डर छोटा हो या बड़ा या कार्ट में पड़ा, कोई वैल्यू या सेगमेंट या कोई भी टाइप, ब्रोकरेज को लेकर अब नो मोह है। और सुन, 2 लाख के स्टॉक्स या 2000 इन्वेस्ट मर्जी से करो यार। ना लगे कैलकुलेटर, ना लगेगा पेन। अल्ट्रा ट्रेडर पैक से होगा ब्रोकरेज सिर्फ ₹10।
कमीशन की टेंशन छोड़ो, 5 पैसा से रिश्ता जोड़ो। विद 5 पैसा's अल्ट्रा ट्रेडर पैक, ब्रोकरेज होगी सिर्फ ₹10 फ्लैट। बीट दैट।
ऐसे करते हैं ट्रेड।
सोच मत छोटे, इंस्टॉल मार।
Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Welcome back. Absolutely flat on the headline indices. Nifty's up just about 8 odd points. Let's bring in Mitesh Thakkar into the conversation to figure out what to do now. Mitesh, good morning. Thanks for joining in. Absolutely flat, but then the market's made it a habit of sorts, right? These days, the first half is very quiet. Second half, we get a move. First of all, let's talk indices. What sort of a trade are you advising?
Morning, Subi. Yes, absolutely flat, but let's not forget the good recovery which has happened from the lower end, which is roughly about 70 points on the Nifty. So the view on the index remains positive, and buy-in declines is the idea, given the fact that we haven't cleared the highs which were made in the second week of April. So 13,820 is the pivot, but since the directional bias is on the upside, anything close to 17,700 is a buying opportunity, and keep a stop below 17,650. And I think eventually we'll cross the 17,820 zones and then head towards 18,000 plus levels. So stay positive, stay long, and if there are any declines on an intraday basis, closer to 17,700 is your buying zone. Having said that, the calls I have right now, L&T, I think, in the last 2 days has come up very nicely on the trending radar. That's a buy with a stop at about 22.40, and look for targets around 23.50 here. And the other stock which I like, that's BSE or Bombay Stock Exchange. That gave a breakout yesterday. Today is having a subdued session, but the overall setup suggests further upsides here. So buy this with a stop at 480 for targets of 540.
Very much for that, Mitesh. Look forward to chatting with you, and hopefully the market would have moved by then. But let's now turn our attention to the earnings corner. A whole host of stocks are reacting to their quarterly numbers. Sonia, Abhishek and Mangalam from the research team are standing by with the key highlights of the numbers. First, let me go across to Mangalam, who's standing by with the earnings fine print from Tata Consumer Products. Mangalam?
Well, it's been a strong brew that Tata Consumer has reported this time around. The results have beat estimates on all parameters, and as a result of which the stock too has recovered from the lows, and it had seen a big move ahead of the numbers already. The revenues of the company upwards of 3,600 crores. The street was working with a number of around 3,500 crores, and that has flown through to the bottom line as well. The EBITDA of the company 512 crores versus expectations of 472 crores, and the net profit as a result of which at 345 crores is much ahead of street expectations of 265 crores itself. This has been led from all fronts. The India business reported a growth of 15% as against street expectations of 10 to 12 odd percent, and India Foods business grew 26%. Remember, this is the growth driver of the company. And packaged beverages business for India grew by about 1%. That was largely expected because of the big deflation that we saw in tea prices. Whereas international revenue grew by 10%, and Nourishco has done about 181 crores in revenue this quarter as against street expectations of 150 crores. The biggest positive for me, however, is the sequential improvement that we've seen in the international business from 9.5% to 12.9%. That's the international business margins, telling you that gradual improvement will continue out there. And Starbucks has crossed 1,000 crores in revenue for the entire year. So that's an important milestone as well.
All right, Mangalam, thanks a lot for getting us those details on Tata Consumer. The other big earnings that came through yesterday post-market hours is from Bajaj Auto. The stock is in focus after it posted a strong set of numbers. It is flat right now, but remember, the stock has run up a lot, so perhaps a lot of it is already in the price. Sonia's here with the highlights. Sonia, quite a beat on what was expected.
Oh, absolutely. It was a stable set of numbers. No complaints at all. Better than what the street was estimating. It's a 9-quarter high in terms of the margins for Bajaj Auto. And the margins, despite all the challenges, have improved 220 basis points. It's a third consecutive quarter of a margin improvement. If you look at the numbers, the revenue growth of around 7% despite a fall of almost 40% in its export volumes. The revenue growth was largely led by price hikes that the company took. They passed on the higher prices to consumers, and the domestic business business has also come back. The margins, as I said, improved to 19.3% versus 17.1%. Profits have gone up 3.4%. Now, the company says that it sustained momentum on the domestic front, which led to a strong double-digit revenue growth. Brokerages are a bit mixed, but here are a couple of them. Jefferies says that it was a strong Q4 in what was a tough environment. They retained their buy. They raised the target price of to 5,100 versus 4,800 earlier, and they've raised the FY25 EPS as well. Motilal Oswal has a neutral, but they say that it's a strong product mix that has driven the all-round beat, and there are three main catalysts for future growth. One is the Chetak electric vehicle ramp up, which the company spoke about as well. They're looking to ramp up to 10,000 units of production in the next few months. The Triumph product launch, which happens on the 27th of June, there's a new premium motorcycle of Bajaj and Triumph, so that's the next big trigger, and the recovery in exports as well. Morgan Stanley has raised their target price from 4,486 to 5,063. They say there's notable upsides in the near term, and the 4% dividend yield is also something that keeps them overweight. So let's listen in to what the management told us earlier in the day.
Improvement in margins is really on account of three things. One is, of course, we've benefited from the gentle devaluation of the Indian rupee, though the export component has come down, but that's helpful. Then all the cost increases which we have faced, which are not too much, but there are some incidences of cost, even on account of the changeover to things like OBD2, though it was very recent. But the approach has been to judicially pass these on. And the third factor has been actually the most significant one, which is the richer mix. We are now, 60% of our domestic business is in the 125cc plus segment. The three-wheeler business has done extremely well with a commanding market share of 78%. And CNG auto is one of our most profitable products. As you understand, the Bajaj Auto margin is a very complex thing, a lot of moving parts there. For instance, if suddenly see a surge in Africa exports, Africa is generally less than the average. But if we see a surge in the three-wheeler side in exports, then that is at a very handsome margin. So where the where the penny will exactly fall is difficult to say. But this is the point we'll be striving to maintain.
All right, so that was the word from Bajaj Auto. Sticking to good earnings reactions, Mahindra CIE is another such stock. Let's look at it. It was up about 7% last time I saw it. And this is after a pretty strong performance in the quarter gone by. Gains have cooled off to about 4% now. But let's go across to Sonia once again to understand what stood out in the earnings. Sonia.
So, there were no complaints at all in Mahindra CIE's numbers, a very strong set of numbers coming in from the company. And the company said that the margins have improved substantially this time around because energy prices have fallen, especially in Europe, and the European business has stabilized. Now, this is important because remember, in the last 1 year, there was huge pressure in the European markets, and now that seems to have come to an end, benefiting a lot of these large players that have an exposure there. They also talk about how the revenue growth, by the way, was very strong, almost a 20% growth, 18.5% growth compared to what they saw last year. EBITDA up 35.7%, and the margins have improved 200 basis points at 15.6%. Profits as well up about 73%. Now, this is a record margin performance for them. If you look at the performance in the last 5 quarters, on an average, Mahindra CIE has recorded anywhere between 11 to 13% margins. So this quarter, margins coming in at 15.6% is much better than the average of the last many quarters. If you also look at, what the company is doing, now it's pretty much become a multinational with Mahindra exiting a large part of their stake there. Mahindra CIE is now Europe's leading truck forging supplier. It's also India's leading producer of niche axle and engine ductile iron castings. It's the market leader in India for two-wheeler steering races and engine valves. So in its own spaces, it is the market leader, growing its business in a very good way, and hence the street has given it 2 thumbs up.
Oh, absolutely. Thank you very much for that. Mahindra CIE has rallied 67% in the last 1 year. And in the last 2 quarters, we've also seen the FII shareholding and the DII shareholding go up in the company. So in the December quarter, the FII holding in Mahindra CIE was 7.29%. It's risen to 8.62%. Even the DII holding has gone up from 7.5% to 11.2%. So institutional investors too are lapping up this stock. But let's move on and talk about AU Small Finance Bank. It slipped post the Q4 numbers. Cautious analyst commentary. Abhishek is here with the details. Abhishek, the NII and profitability was ahead of what the street was anticipating. So what's led to the miss?
The miss is on the net interest margin. So net interest margin has compressed or has begun to compress, and it is expected to continue going ahead as well. The net interest margin for the quarter was at 6.1%. This compares to 6.3% in the same quarter last year and about 6.2% in the previous quarter. The operating profit growth on account of slower NII growth has grown by just 2.5% to 2.7% on a sequential basis. This compares to Q3 growth of 11.4% on a quarter-on-quarter basis for the operating profit. Cost to income ratio has increased to 63.1% when compared to 61.6% in the previous quarter. The other expenses, that's hurted them. It's grown in double digits on a sequential basis. Tax rate has also declined by 5%, which has actually aided the PAT this time around. Asset quality continues to see improvement trajectory. Gross NPA ratio is down to 1.66% when compared to 1.8% in the previous quarter. The restructured book has also declined on a sequential basis. So with respect to our poll, their PNL, that is NII as well as PAT, is ahead of our poll. There is a downgrade which has come in from Nomura. They have downgraded the rating to neutral from buy for AU Small Finance Bank. They have cut the target price by more than 12 to 13%. The new target price is 630, which has been cut from the level of 725. They say that ROA moderation is seen going ahead, and they see headwinds to the near-term return multiple. So they see multiple challenges to AU sustaining these return metrics over the near to medium term. Back to you.
All right, Abhishek, thanks a lot for getting us all of the details on AU Small Finance Bank, around 3.5% in the red right now. By the way, for the markets, on the Nifty Bank, you're seeing a little bit of a recovery play out. You have names like HDFC Bank, which are at the high point of the day. ICICI also attempting a move higher right now. So you are seeing a little bit of recovery coming through over there. But with that, we are going to get into a short break now. When we come back, we're going to discuss the fundamentals of this market. Mohit Batra from Markets Mojo will be with us.
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1026 rupees to 1080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
A. Balasubramanian decodes the investment space for retail investors and draws out the do's and don'ts on how to grow wealth by goal-based investing through mutual funds. Watch all this and more on Mutual Funds Sahi Hai. Give wings to your savings in association with News 18 Network at these times.
Hey, कमाल की कार है ना? हमें लेना क्या?
सर, कमाल की कार के लिए कमाल का पेट्रोल भी चाहिए।
एकदम टॉप का,
जो हमारे इंडिया में मिलता कहाँ है?
अरे सर, पर इंडियन ऑयल पे मिलता है। प्रीमियम कार्स के लिए इंडियन ऑयल ने बनाया है 100 ऑक्टेन वाला देश का सबसे प्रीमियम पेट्रोल, XP 100।
वाह, इंडियन ऑयल की बात ही कुछ और है।
इंडियन ऑयल, पहले इंडियन, फिर ऑयल।
Welcome back. Market's not going anywhere. It's a good time then to get in some investment trading ideas, investment ideas, Mohit Batra, founder and CEO of Market Mojo, now joins us on the show. Mohit, what have you made of this sideways move the markets have been in for a long time now, and what will get us out of this funk?
Well, I think there are, there are chances that we may get out of this in the next couple of quarters, but I think there are very big concerns that are looming around the market. Market needs to and would be in the volatile zone looking at where the fundamentals are today. I think 2-3 factors that we're closely watching, international I'll talk about first, and then maybe a couple of domestic factors, is the big stress on the small banks in the US. You saw the First Republic Bank down by around 50% yesterday. Deposit books are typically moving from the smaller banks to the bigger banks. That is one big concern. Number two is the commercial real estate market in the US is coming under stress. We know that close to $8 trillion worth of loans are coming for refinancing, and 80% of these loans are with the smaller banks. So I think one of the big crisis moments that we need to watch out for is the whole small banks in the US. The second factor, I think we keep talking about the Fed increases, which is, maybe another 25 basis point from here on and maybe stabilized and, then pause towards the end of the year. But the US debt ceiling of $31.4 trillion is being hit very soon. And I think we need to watch out of how the US markets will react to that. Domestically, I think one of the main factors that should be clear in the next month or two is the whole El Nino effect, whether it hits before the monsoons in India and what is the impact on monsoons out there. That is one big impact, and how we typically respond to the global market. So we personally feel that this is a very typical stocks up approach where, sectors rotation will be happening very fast, barring a couple of sectors where we have a very clear view. And investors should be looking at very high quality stocks and try and invest in those very cautiously at this point in time.
Mohit, you said you see this kind of sideways range continuing for a couple of quarters. Is that right? And I'm talking about this kind of range trade that we've been seeing going on. You expect it to extend for a couple of quarters from here?
That's right. I would say 1 to 2 quarters at maximum. We still are holding our target of Nifty at around 21,100. We still feel that we'll be able to do a good teen kind of a return this year. But I would say that the stress time in the market will sustain with volatility over the next 1 to 2 quarters.
Okay, well, that's saying it as you see it, Mohit. Hi. What will turn the scales, so to speak? I'm just trying to think, because we've been in a range right from the start of 2023, in fact longer, go back last year as well. So what could tip the scales? Could it be the start of the lower interest rate cycle, which is probably still a couple of months away? Let's leave out external factors. Let's leave out, US banks, etc., or whatever's happening in the West. In India, is it going to be some sort of blowout, unexpectedly good corporate earnings? Is it going to be a good monsoon? What could tip the scales, which gets the market out of its slumber?
See, I think one of the things that you've seen RBI very clearly in the last interest rate, they didn't hike the interest rates primarily because growth is getting affected. And I think the government is watching that very closely. We have elections next year. We have a strong impetus that will come on the growth now towards the next election. We've seen a large, capex on capital goods announced at around 10.5 lakh crores. So there is a lot of effort that is going by the government to try and get the growth back. So this was, I think, Fed pausing the interest rates is one event. Government of India focusing on growth is another event. And I think there will be, full escalator on the growth parameters in this particular year, which can do a big revival to the market. And if we have, decent to good kind of monsoons, and I think there would be a very big respite in the market. So as I said, the next quarter is very important because of the monsoon factor and because of, which way the Fed commentary goes. I think RBI has shown some kind of a resilience on the, it is a high inflation country. Predominantly, we don't have to mirror the US, barring the fact that we have to make sure the currency is in control and so on and so forth, but not at the cost of growth. This is a growth market. And if you were to look at this philosophy going forward, and I think that RBI will come out with strong comments on growth moving forward, which is clearly being reflected in the reforms as well. So I think...
So Mohit,
growth, yeah.
Sorry to come in over there. Just going to a point that you highlighted, in terms of factors that can make the market sort of move. You said growth pushed by the government. Now, that's already happening. In fact, that's the only area of the market. I'm talking about all the order wins, whether it's railways or, capex. Look at some of the capital goods stocks or some of the industrial stocks like Siemens, ABB. That's the only pocket of the market that's done well. So what additional are you expecting from the government side, and how would you look to play it?
No, I think the one of the main factors is how fast do we or at all do we increase the interest rate. So if you have a decent monsoons, I think interest rate hikes will pause in the country. If you don't have, then we can go back to that interest rate high regime. I think growth factors of the government is in, but having said that, the reflection of that on the prices in the market is not happening. So, and predominantly this is it's a situation where there is a whole amount of global factors that are coming into play in terms of sentiment of the market, and that is getting priced in. I think you talk about IT today, a lot of things that have happened on the IT sector has been priced in. You talk about pharma today, looks good. A lot of things are happening good out there. You're seeing a double-digit growth out there. We're seeing generic prices being stabilized out there. You see capital goods looks very good. So I think with the whole sentiment overall being a little more muted on the negative side, as we've not seen over the last 1 year, most of the parameters are already fixed out there. They just have to reflect in the price.
All right, Mohit, thanks a lot for that. We're going to leave it there, and we hope to chat with you very soon once more. Thanks for taking us through your call on the market as well as some of these individual pockets. With that, it is time for another short break on the show. But when we come back, like we told you, we have some big earnings lined up today. Maruti Suzuki, Bajaj Finance will both be posting numbers later in the day. So we're going to line up all of the estimates on the other side.
Let's you and me step out and see how blue the sky, how tall the trees.
Skoda brings you Kushaq and Slavia, India's safest family cars.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
Hey, buddy. Hope you like them.
Introducing Apollo Alpha. Add more thrill to your beast.
A. Balasubramanian decodes the investment space for retail investors and draws out the do's and don'ts on how to grow wealth by goal-based investing through mutual funds. Watch all this and more on Mutual Funds Sahi Hai. Give wings to your savings in association with News 18 Network at these times.
Welcome back. You're still tuned into Trading Hour, and let's talk about the important earnings that are expected today. Bajaj Finance will be reporting fourth quarter numbers sometime around market close today. So Abhishek is here to tell us what we can expect this time. Abhishek.
Well, Pavitra, they have already given the business update. Q4 seasonally is a weak quarter on a sequential basis in terms of the new loan momentum. However, this time in Q4 FY23, the decline in new loans is just about 3.1%, which is perhaps on the lower side when you take a look at the historical levels of 8.9%, 15.6%, or even 22%. Over there, they have arrested the declining trend this time around. The customer base is up 20% YOY and about 4.5% sequentially. We have seen AUM growth coming in at 28.8% YOY and about 7.15% quarter on quarter. So sequentially, it's one of the best growth that you are seeing in last 4 quarters for Bajaj Finance. So average ticket size, as per my calculation, is up 7.3% YOY and about 2.5% sequentially. Motilal Oswal estimates the net interest margin or the spreads to decline by about 30 basis points on a sequential basis. Asset quality largely to improve a couple of basis point over there. 1.14% was the gross NPA ratio in Q3 FY23. A PAT growth will be robust. That will be aided by the fact that provisions will be on the lower side or decline on a sequential basis. Now, management commentary with respect to future outlook in terms of growth and how they see the net interest margin and spreads in a rising interest rate scenario, we need to see that as well. So our poll suggests NII growth of nearly 23.8% YOY and about 1% sequentially. We are working with a profit growth of 28.5% YOY and about 4.6% sequentially. Back to you.
Okay, got that. Thank you for the details there. Abhishek's Bajaj Finance is a big one. We are awaiting today. And so is Maruti, which will be reporting first quarter numbers as well. Sonia is joining in with the key expectations. Sonia, so everyone's waiting to see the pulse of the consumer on the discretionary side. What's the expectation?
So it's expected to be a good quarter this time around, largely because of a couple of things. Demand has come back, supply chain issues have eased, as well as, you have a slew of new launches. The festive season demand was there. So all of that put together will ensure that Maruti reports a decent set of numbers. We're expecting a revenue growth of 23% at about 32,670 odd crores. Now, the volume growth has been just 5.5% year on year, but it's the realizations which have gone up by almost about 16% because of the price hikes that the company undertook to pass on the higher raw material costs and the emission norm costs to the customers. And that price hikes will result in a higher realizations by about 15% quarter on quarter. For Maruti, if you look at it this time around, the expectation is, of course, on the demand front, we're expecting demand to pick up. But even if you look at the EBITDA margins, a couple of things: favorable product mix, price hikes, and operating leverage benefits. The volume growth, though, if you look at it just on a growth parameter, has slowed down to single digits. So in Q3, the growth was about 8.5%. In Q2, it was 36% year on year. And in Q4, it will be just about 5.4% overall. Now, that brings us to the big question of whether, the normalized growth will be in low single digits. The management has said that the industry itself will grow just about 5 to 7% in FY24. So in that context, there is a slowdown compared to what we've seen in the preceding quarter. But the preceding quarter was also, preceding year was also about the pent-up demand coming through, etc. So commentary is keenly awaited. And because of the slowdown that we've seen in growth in general, the stock has not done much. It's absolutely flat this year. But Q4 numbers will look good. Back to you.
Thank you very much for that. So realization driving the growth for Maruti. Let's slip into a very short break. Our focus on earnings will continue. Key expectations from some of the mid-cap IT companies due to declare their numbers today, like L&T Technology, KPIT, Tanla, on our radar next.
What? You think I am slow? I am slow. I'm a tortoise. But your wealth managers? They shouldn't be as slow, No? Oh.
Choose Nuvama. We move at the right pace because we only do what's right for you and your money. Nuvama. Let's do it right.
I am heat.
AC gone.
Blue Star on.
Blue Star Fast Cool Inverter AC with voice command. Bye-bye heat. Blue Star.
After the resounding success of India Inc. On the Move 2022 in Gurgaon, this year we're coming to Mumbai to explore how sustainable practices are the key to long-term success of the manufacturing industry. Get valuable insights from industry luminaries, experts and policymakers on how your business can prosper with this new paradigm for growth. Only at Forbes India and CNBC-TV18 present India Inc. On the Move, Sustainable Manufacturing, powered by Rockwell Automation. The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com.
Co-powered by IBM.
Welcome back. Since we are talking previews, a bunch of mid-cap IT companies will also be reporting today. And let's go across and ask Rima what to expect. I know there are, I think, 3 companies on your radar, Rima, but I want to start with KPIT Tech because this has been this high-flying stock. The market can go nowhere, but KPIT has only been going higher and higher, right? So tell us what to expect.
Well, you know, KPIT Tech is up 27% this year, right? This is despite the weakness that we've seen in the last fortnight. The stock is just 5% away from its 52-week high, and numbers are anticipated to be strong. JP Morgan is expecting a 5.5% constant currency revenue growth. Remember, some IT companies have reported a decline in revenues in the current quarter. The reason for that is the company has won 2 very large deals. One was Honda and the other one was Renault in the software-defined vehicle space. So this will propel growth for the company at least in the first half of the year. So the key is their FY24 guidance. KPIT gives you a guidance, so the street is going to be watching that very closely. But I was seeing a Morgan Stanley note, and they're saying consensus is baking in a 27% revenue growth for KPIT Tech next year.
FY24.
Yeah, that's what the consensus
27% top line growth.
27%. That's the Morgan Stanley. They're saying based on the Refinitiv consensus expectations, it's a 27% growth. So we'll wait what the guidance looks like, but it could be a good quarter, and the outlook is likely to be strong given this, big, large deal wins that the company has won.
All right, so that is from KPIT Tech. We'll look forward to that. The other one is L&T Tech, which is also due to declare results. What is that expected to look like?
Well, an okayish set of numbers. Dollar revenue growth 2.4%, constant currency revenue growth of 1.8%. But growth is also coming on the back of a flat quarter. In Q3, the company had no growth. 0 constant currency revenue growth on the back of higher furloughs. So given Q3 was exceedingly weak, Q4 is likely to look a little bit better. In Q3, that's in the December quarter, the company had lowered their FY23 guidance to 15% versus their earlier guidance of 15.5% to 16.5%. For FY24, CLSA says the guidance at 8 to 10%, excluding the benefit from an acquisition called SWC, and they expect the company to reaffirm their FY25 guidance of $1.5 billion of revenues and EBIT margins improving to 18%. So that's L&T, technology services. And let me just wrap it up by Tanla. Now, Tanla Platforms has been quite, a stock which has struggled a bit. In the last 1 year, the stock is down 57% because the revenue growth rates for the company have moderated quite significantly. It's a company which used to see a growth of 30%, but in the last 2 quarters, the revenue growth has been very, very muted. There you have the numbers. Minus 2% year on year in the December quarter and just +1 in the September quarter. HDFC is saying this could also be a soft quarter due to lower messaging volumes in both enterprise and the platform segment. Volume growth is likely to be impacted due to lower promotional messages and marketing campaigns. So KPIT Tech has been a flyer. Expect a strong numbers. Tanla Platforms has struggled. The stock is down 57% in the last 1 year, and that's a company which could have a softish quarter. And L&T Technology Services, the guidance is going to be very, very crucial, will be an indicator for the ER&D outlook. Well, it's a wrap on Trading Hour. On that note, thank you for watching. Stay tuned. Halftime Report is up next.